Welcome everyone to Congresswoman Suzanne Bonamici's Student Loan Know Your Rights webinar with experts. We'll begin shortly. The Congresswoman will share opening remarks, and then Lane Thompson, Oregon Student Loan Ombuds, and Mike Pierce, Executive Director of the Student Borrower Protection Center, will make brief presentations. Then Mike and Lane look forward to taking your questions. During the question portion, we will be using the Q&A function in Zoom. If you would like to ask a question, please click on Q&A at the bottom of the screen. Please note that this webinar is being recorded and will be posted to the Congresswoman's YouTube page. Congresswoman, please go ahead.
Well, thank you, Kelsey, and welcome everyone to the webinar. Thanks for being here. Thanks to my staff, both in my Oregon office and my DC office, for their hard work. And thanks to our experts who I'll introduce soon. I'm honored to represent Northwest Oregon. I am a senior member of the Education and Workforce Committee. Education is a top priority of mine in Congress, and that includes not only early childhood K-12, but certainly lowering the cost of higher education and making it more accessible and affordable. So some of this comes from my personal story. I worked my way through college, first community college, and then 2 years of University of Oregon and 3 years of law school using a combination of grants and loans and work study. I worked at legal aid while I was in law school, and then I became a consumer protection attorney at the Federal Trade Commission. And I had student loans, but I was able to pay them back quite easily because higher education was less affordable and the repayment plans were more fair. It's a different reality now. That was long before the Public Service Loan Forgiveness Program. Many of my colleagues, particularly on the other side of the aisle, don't understand what most people on this webinar are likely experiencing. The hardship, even after trying and earning their education, trying to pay those loans back. And oftentimes they see the programs as a giveaway, but many people have been paying. Sometimes they've paid back even more than they borrowed, and some still have debt that's thousands of dollars, even though they've been making regular payments. So the student loan system is broken. It should be opening doors of opportunity for people who seek higher education, not pushing people into financial distress. And I'll note that when the Higher Education Act passed back in the civil rights era, that was all about opening the doors of opportunity. It wasn't about putting people into debt. It's about making higher education accessible. So certainly there's been a lot of anxiety and uncertainty right now, especially as borrowers are experiencing student loan efforts that have been held up in court, student loan forgiveness efforts. Of course, the Biden administration has been working hard on that. And courts have dragged out the process and sometimes turned the clock back. And as we transition to a new administration, I know there's a lot of questions and a lot of anxiety. So I've been working extensively on this issue. I lead the appropriations letter, which is the funding letter request for the student aid administration funding. I've recently led 2 letters to the Biden administration urging the Department of Education to make processing the loan forgiveness applications and borrower relief priorities in the final weeks. Like, we still have a couple weeks left. Let's see how much we can get done. I'm also and have been working and will continue working on bills to make it easier for people to use income-driven repayment, and also give borrowers more protection by establishing an office for students and young consumers in the Consumer Financial Protection Bureau. I know many of you on this webinar are still working toward the 120 payments for the Public Service Loan Forgiveness Program. And I have to say, it is the government's responsibility and my responsibility as a member of Congress to fulfill that promise that was made to people who are in the Public Service Loan Forgiveness Program. And I think about all of the academic and career decisions that were made based on that promise, that you work in public service and then at the end of your tenure and making reasonable payments during that time, and at the end your balance is forgiven. So we can't ignore that promise that was made. And I know Mike and Lane are going to provide some tips to advocate for forgiveness. And I know that the return to repayment has been really challenging It's frustrating that programs keep changing along the way or have been blocked, as I mentioned, by the courts. And again, the Biden-Harris administration has made some progress, but that was really limited by opposition from not only members of Congress, but from states and people who, extremist special interest groups who are really making this complicated, overly complicated, and turning, as I said, turning the clock back. Now, some of you have already shared your stories with my office, and I've heard many over my time in Congress, and each story is unique. They're powerful illustrations of the harm that's been caused by this broken student loan system. And people now are hoping that they won't still be in debt when they retire or have their Social Security payments garnished, for example. One person said, despite dedicating a significant portion of my income to repayments, I'm on track to carry this debt for the rest of my life. The reality is stark. I will die with student loan debt. That's certainly not the intent of the Higher Education Act. It's to open doors of opportunity, not to saddle people with debt for the rest of their lives. And no one should be in that situation because they invested in their education. Education is one of the best investments we can make. So I understand that people are concerned. The incoming Trump administration, Republican majorities in Congress, they're going to attempt to end any forgiveness programs and remove resources that are meant to help student loan borrowers. I'm here for the fight because, as I mentioned, I've been through this before. You probably heard of Project 2025, which was sort of the blueprint for the next Trump administration. They called for a complete end to the public service loan forgiveness program, and that would be devastating. So please know that I will continue to fight against any rollbacks to the borrower protections. I'll be your advocate in Congress, regardless of who's in the majority or minority, regardless of who's in the White House. So I want you to please stay in touch with my office. Know that I'm continuing to work on behalf of students and borrowers for protections and solutions. So I was in Congress for the first Trump administration and fought against Education Secretary Betsy DeVos and her proposals. We are preparing for this incoming administration, and just want you to know that I'm there to be your voice. So we're going to send a follow-up email with all the information that we're covering in this webinar. We're going to include links to all the programs that we'll be discussing, and we'll also put the information on my website, so you will have this as a resource. So now I'm pleased to welcome our excellent experts today, student loan advocate Lane Thompson, Oregon's first student loan ombuds. Lane helps borrowers understand their rights and resolve complaints between borrowers and servicers, collecting payments. Oregonians have additional protections and resources for student loan debt because of Lane's work. And joining Lane is student loan and consumer protection expert Mike Pierce, the executive director of the Student Borrower Protection Center. Mike is an attorney, a former congressional aide. He actually helped draft the public service loan forgiveness legislation. He's a former senior regulator with the Consumer Financial Protection Bureau, and now the co-founder and executive director of Student Borrower Protection Center. So Mike and Lane, thank you so much for your time, for your expertise. I've really appreciated working with you both to advocate for and support student loan borrowers. So I asked Mike and Lane to be here today so you get the expert information you need. Again, this webinar will be recorded, and anyone who's RSVP'd will receive an email with a list of resources and a recording of the webinar. And I know they will try to get to every question possible, and my office will follow up via email if you don't receive an answer today. So Mike and Lane, I'm going to turn it over to you, and thank you again.
Thank you so much, Congresswoman. As a reminder, we'll be taking a mix of live and pre-submitted questions. Mike and Lane will be giving presentations with important updates and resources. Please wait to submit a live question because it might be answered in their presentation. Lane, the floor is yours.
Thank you so much, Kelsey, and thank you, Congresswoman. I'm really happy to be here with all of you today. I am coming to you from Oregon's Division of Financial Regulation. So I'm just going to run through this presentation for y'all, hand it off to Mike, and then we'll do the questions at the end. So, for my role and for this presentation, it's just important that I have a quick disclaimer here. I just want to make it clear that we're not endorsing or recommending any particular product. This is information, this is not legal advice. So really just making it clear kind of where we're coming from. So the Division of Financial Regulation, we're one of Oregon's biggest regulators, and we work within the Department of Consumer and Business Services. So we are in the same building, the Labor and Industries building in downtown Salem. We're over there with the Workers' Compensation Board, OSHA, Building Code Division, and we kind of all work together to protect Oregonians. In DFR specifically, we are overseeing a range of financial products. So when we say oversee, that means we license, we do exams at these financial institutions, and we also take complaints against them. So what we're going to be focusing on today is clearly student loans, but I just like to mention that our office does help with a range of issues with insurance providers, mortgage servicers. So if any of that comes up, we might be a resource for you as well. Okay, so I'm Lane Thompson. I use she, her, and they, them pronouns. I'm Oregon's first student loan ombuds, and Mike was actually part of the grassroots effort that created this position in Oregon. So we were the 15th state to create this position. There is going to be close to 20 in the near future. And really, the reason this role was created is because there was not enough oversight at the federal level of student loans. So basically, people were feeling like they needed additional resources, information, and support in regards to their student loans. I do work with the other state student loan ombuds. We all kind of collaborate on different topics. And in addition to creating this position to provide support, the law also created a requirement that student loan servicers get licensed in Oregon. So one part of my role is helping people navigate what's a legitimate financial institution and what's potentially a scam. So I got an email just yesterday. Someone was asking me, is Nelnet servicing a legitimate servicer? And is this their website? So what I told that person to do and what I would do is go right over to the NMLS Consumer Access site. So you can access it at nmlsconsumeraccess.org. There's also a link right on the top of my DFR site. And all you need to do is just type in the name of the company, and then it's going to give you, that little page to make sure you're a human, and then it's going to pull up whatever information they have about that servicer. So if they don't show up in here at all, that would be a big red flag. There'd definitely be a time you would want to contact me and kind of see what's going on. If they do show up in here, then you can open up from this page and see additional details on where they're licensed, what type of licensure they hold, etc. So that's just one way that we hope to kind of protect people from being targeted, from being victims of scams. Okay, so what all do I do in this role? The kind of main bulk of my work is in the complaints area. So I can take complaints against servicers. Specifically, the topics that I tend to be able to help with are things like application of payments. You sent a payment, but your balance didn't go down. You'd like to see that payment applied to your account. That would be a good time to file a complaint. Another topic I deal with a lot is credit reporting. If the status of your loans are being reported incorrectly, that'd be another example of a topic to file a complaint on. I also just spend a lot of time on emails and phone calls, just kind of trying to help people get connected to the resources they're looking for. In addition to that, it's also my responsibility to produce an annual report to the legislature. That includes an analysis of my complaint data, of the overall landscape, and also includes my policy recommendations at the state level for things that I think we can change to improve the student loan experience for Oregonians. Always encouraging people to give me ideas for that if they have things that they've thought of. Okay, so what I really am going to cover today is just kind of what is the student loan system right now? What does it look like? After that, Mike's going to get a little bit more into some of the details of some of the stuff that's up in the air right now, but I want to give you all kind of some pretty clear, straightforward, this is what is happening. So when we're talking about student loans, we are really talking about two different types of products. One is a private student loan, and those have lots of names, things like signature loan, and those honestly function pretty similarly to a personal loan. They are determined by your credit rating, and they have most of the attributes of just a regular old loan. What we're going to be focusing on today is the federal student loan system. So these are loans that were either made directly by, or at the very least, insured by the federal government. So what does that part mean? Made by or insured by? Well, prior to 2010, loans were generally made by banks. This is what you'll be hearing referred to as an FFEL loan. They were generally made by banks and by other financial institutions and insured by the federal government. I like to make the analogy that it's similar to how an FHA mortgage is backed by the federal government. Those loans were they kind of stopped making them in that way starting in 2010. The government decided, let's do these directly through the Department of Education, directly out to students. So those are direct Parent Plus, Grad Plus loans. So those are the loan types that are made generally these days from the federal government. A lot of kind of the push over the last year has been getting folks with these commercially held loans to consolidate them to become department held or direct loans. Okay, so who is it that's involved in here? I already mentioned that I take complaints against servicers. And that is true on both the private and federal side. There will always be a servicer involved in your student loan. They are the entity that accepts your payments, applies them, reports your credit status, just kind of does the day-to-day business of that loan. And when we're talking about private loans, that's really all that's going to be involved is more or less just that one servicer, that one bank. When you're talking about federal loans, there's more entities involved. So when I say I take complaints against servicers, what that means is that I am working directly with these entities that are administering that program. The Department of Education is involved both as a guarantee agency on those older loans and as the actual owner of the newer loans. All right, so I just want to run through a couple kind of main topics here for y'all. Income-driven repayment has been a very hot topic over the last year, so we'll start there. I want to touch on forgiveness and cancellation a little bit, and then we'll talk about avoiding default and what's coming down. Okay, so income-driven repayment. Generally, I have this slide set up so that it says what the monthly percentage of borrower income is and what the amount of payments might be for different borrowers. This time I made it general. The reason I made it general is that it's not clear exactly what the future of the income-driven repayment program will look like due to the ongoing litigation against SAVE. There will be some type of income-driven repayment, most likely. So, what I really want people to be aware of here is that income-driven repayment is always a percentage of the borrower's income. So that means they take the federal poverty level, they take your income, they subtract the poverty level from your income, and that leaves what they call your discretionary income. Then a percentage of that is what you're required to pay. Now, one of the great things about income-driven repayment plans is that for a lot of folks, particularly low income, seniors, people on fixed incomes, it's possible to get a $0 monthly payment. So while you're paying $0, each month is counting towards the eventual time when those loans will be canceled. So it's better than being in forbearance because a forbearance or a deferment generally isn't going to count towards that time that you're making progress towards income-driven repayment, cancellation, or public service loan forgiveness. One of the biggest downsides of income-driven repayment is negative amortization. So with most loans, you make a payment, the loan balance goes down. On an income-driven repayment plan, that may not be the case. If your payment monthly is less than the amount of interest you are charged monthly, then your loan balance will increase. One of the great things about the SAVE plan that's currently being challenged was that it was going to get rid of that negative amortization. So when you hear about people who say, oh, I've paid back 3 times my loan and I still have a balance, this is generally how that happened, is through being on an income-driven repayment plan or being in forbearance over time, and that the difference between your payment and the interest accrued gets added to the principal over time. Another attribute of income-driven repayment plans is eventual cancellation. So in the last year, a couple years, you may have heard of the one-time account adjustment. That's what this was trying to address, was trying to make sure that it was clear in the Department of Education systems how much progress people have made towards their 20 or 25-year forgiveness. So I'm sorry not to go more into detail on exactly what income-driven repayment plans are available or what they look like. But for today, I really just want to say there will be income-driven repayment. This is how it's determined. I just really like to touch on that the loan cancellation was written into the original income-driven repayment plans. It was 25 years of repayments for most loans in that case. During the one-time account adjustment, many folks who had been paying on their undergraduate loans for at least 20 years saw those canceled. All right, now we're going to run through a few more types of cancellation and discharge, and this is kind of the real quick run through. If you go to studentaid.gov, you can read more detail on each part of this, but I really want to give you all the highlights. So public service loan forgiveness, you all might remember that as of about 2020, this program was not working. That was because the way that it was originally written and then kind of edited over time meant that by 2020, it was very difficult for people to access this program. During the most recent administration, they made some changes that made public service loan forgiveness more accessible and I would say generally more resilient. So as of July 1, 2023, and so this is for anyone now who's applying for public service loan forgiveness, these are the rules. You need to have the qualifying loan type, so that's a direct loan. You may need to consolidate your older loan types into a direct loan to become eligible. If you do consolidate your loans, there will be a weighted count assigned to those. That's going to be a little bit complex, but not anything that most of y'all need to worry about at this moment. The other 2 attributes that you need in order to have your loans forgiven under the Public Service Loan Forgiveness Program are the qualifying payments and the qualifying employment. So it does need to be 120 payments. For most folks, that will be 120 payments on an income-driven repayment plan. Some other plans can count. The main plan that does not count for public service loan forgiveness is the extended payment plan. Qualifying employer, so that is government, local, county, tribal, federal, state. It is nonprofits, specifically 501c3s. Sometimes the C4s and C6s fit in there. If you're in that category, you could reach out to me. But generally, it's going to be a 501c3 nonprofit. And you need to be working at least 30 hours a week. So for most people, what this looks like is that they will do their normal work and pay their normal payments. And then after 10 years of being in that work, they will submit a form that says, I meet all of these eligibility criteria. And then the federal government processes that form and determines whether or not they believe you meet that criteria. It is a program where all the remaining balance is forgiven after the 120th payment. So I sometimes hear people talk about it as I'm in public service loan forgiveness or I'm not in. Well, the truth is that anyone may or may not be making progress towards public service loan forgiveness. And it's a benefit you apply for at the end of the 10 years. I just have been working with somebody who wrote 120 checks and sent them all at once. Unfortunately, that is not going to count as your 120 payments. It does have to be over that 10-year time period. But it doesn't have to be consecutive. So let's say you work for the government for 5 years, you go work for Nike for 2 or 3, and then you come back to a nonprofit for another 5. That still would add up to 10 years overall and could make you eligible for public service loan forgiveness. The one thing I want to point out here is the 30 hours per week. For those of us in the industry, that new rule was very clarifying because it used to be somewhat unpredictable and based on different standards. But now it is just simply if you work 30 hours a week at least for a qualifying employer, then that month counts. All right, a couple other types of forgiveness and cancellation I just wanted to touch on. A closed school discharge. So I know one of the questions that was submitted beforehand is that I went to a school that's now closed. If you were attending when the school closed, it is likely that you are eligible for a closed school discharge. In some cases, they've automated those. So certain schools have been able to cancel all the remaining debt for people who were enrolled when they closed or who had graduated very soon before they closed. If you are not in that category that had it automatically applied, you can go to studentaid.gov and apply for a closed school discharge. The one thing I will kind of flag there is that the school needs to have closed very soon around the time that you attended. It's kind of the big one there. Borrower defense to repayment. This has been a very big topic over the last few years. This is the discharge for people who went to a school that was predatory or that otherwise defrauded or took advantage of them as students. There have been some changes to the borrower defense to repayment program. There have been some court challenges to those changes. So that's another one where a lot is moving quickly. But if you are somebody who feels they were treated improperly by their school, I would recommend at least looking into the borrower defense to repayment process. That's another place that I can help out. I've reviewed quite a few borrower defense to repayment applications. So if you just want another set of eyes on it before you submit it, that's another way I can help. Total and permanent disability discharge. So this is a discharge available to people who are not able to work and to earn income from work. This is a good option for many retired people. Because even if you aren't totally disabled, if you're not going to be working due to your physical and health and age status, it might be worth looking into. There's also been some automation started with total and permanent disability discharge, and that has to do with certain folks who have disability through SSA and also certain folks who have disability through the veterans. There's been a little discharge directly that way, but overall, most folks will need to apply for that as well. The most recent changes to that program removed the 3-year monitoring period. So that was also a big win because it used to be that a lot of people missed out on their total and permanent disability discharge because they ended up earning some income or forgot to submit their documentation during that 3-year period. That no longer exists. And it also has become just a little bit easier to complete that disability application. So I would recommend folks look into that if you think it may apply to you. Okay, now we get to kind of the bummer part, which is what happens if you're behind on your loans. So ever since 2020, there has been no collection on private student loans. I mean, on federal student loans. Sorry, they have been doing it on private loans. What that means is that in the last 5 years, the collections companies have not been coming for you. You've not been getting your wages garnished. But if you were behind on your loans before 2020, or if you haven't made payments since the return to repayment in 2023, the collections are going to start now. So we don't know exactly what it looks like. That's still to be determined, but it is clear they are going to start collecting on these delinquent and defaulted loans. A delinquent loan just means that you have missed your loan due date. So you could be delinquent on the 2nd of the month. And, if you are delinquent or you're becoming delinquent, that's when you would want to get onto an income-driven repayment plan. You would want to call and ask about forbearance. It's really a good moment to just take action to address where you're at. Your loan is considered defaulted once it's 9 months late. And so this is specific to the federal student loan system. Within private loans, they're going to consider it defaulted a little earlier. But at the federal level, they consider your loan defaulted at 9 months. And then it gets reassigned to the part of the Department of Education that does collections, basically at 1 year. So at that point, your loans are reported as in default at the credit bureaus. That can negatively impact your credit score pretty badly. The entire balance of your loan technically becomes due, and your tax refunds, wages, and even federal benefits can be garnished. So we really want to encourage people to do anything and everything they can to avoid getting to that defaulted spot. And that's another time that you could reach out to me if you're just trying to figure out how to avoid default. So if you do find yourself in default, let's say you're one of those people who graduated from college in 2015, never had much income, did your best to ignore your loans, and now it's 2025 and they're defaulted and your wages are being garnished and they are taking your savings out of your savings account and you aren't getting your tax returns, you're going to need to do something to get those out of default. Unlike some other loan types, these loans do not go away. They are going to collect this federal loan debt. So your real kind of best options at this point are either rehabilitation or consolidation. The consolidation takes your old defaulted loans, kind of wraps them up in a little bow, gets rid of them, and gives you a brand new loan that has the same attributes as your old loan, the same interest rate, the same balance, etc. Kind of what's nice about doing the consolidation route is it's quick, right? You can consolidate, get onto an income-driven repayment plan, and be back at current status pretty easily and pretty quickly. The loan rehabilitation takes longer. You have to make small payments for 9 months. It's usually $5 per month. And the downside of the consolidation is that it doesn't remove the default. You're still going to show as defaulted on your credit report on that old loan. You'll have a new loan that shows as current. But the difference with the rehab is that it actually changes your status from defaulted to current. Kind of pros and cons to either route. It really is what makes the most sense for your situation. All right, getting towards the end here. Looking forward, I participated on a negotiated rulemaking committee to look at student loan debt relief in 2023 and beginning of 2024. That went through quite a long process and was eventually withdrawn by the Biden administration just here in the last few weeks. So we will not see any large-scale forgiveness via rulemaking. Oregon's average student loan debt per capita is decreasing. I just like to mention this because there is some hope, right? We have great programs like the Oregon Promise. And I just was reading recently that Reed College is now offering free tuition to families who earn less than $100,000. So I think we are seeing progress towards college becoming more affordable. I always recommend that folks look into all available scholarships. There's an individual development account in Oregon, and community colleges are really strong here. And then kind of the last thing that I just want to point out is that there is this new platform for student loan servicing. So you may have noticed that your servicer moved from mohela.com to mohela.studentaid.gov. That's part of this change. Also part of this is how they move the public service loan forgiveness program kind of internal to the Department of Education instead of having it be administered by one of the servicers. So what they're moving towards is having all of it on one site. So right now, studentaid.gov is going to tell you about all of your federal student loans, but you need to go to a different site, to your servicer's site, to make a payment. Eventually, they're moving towards having that all be on one site. So that's kind of just another thing to keep in mind. I've already mentioned most of this, but some good times to reach out to me is to file a complaint, to verify rights and responsibilities, check if something's a scam, or to just access additional resources if there's information that you're not finding on my site or on studentaid.gov. Here is our social media. Please follow us on social media. It is so fun. Here's my contact. I really just have this in here so that when this gets sent out to you all, you have it readily available. And then we have this QR code and a link at the bottom of the page to provide feedback on this presentation. So we're always trying to improve to make these more valuable and more interesting to the people that we're presenting to. So if you have a second, please do go on there and provide us with a little feedback. And that is the end of my presentation. So I'm going to go ahead and hand it back to Kelsey to keep moving us on. Thank you so much.
Thank you so much, Lane. We really appreciate your presentation. I'm going to send it off to Mike. The floor is yours.
So much. I'm going to try to keep it a little bit shorter than Lane. Lane covered a ton of ground and is really one of the true experts on this stuff. And so I'm going to try to give a sort of a light update of the state of play right now, given all of the chaos in the student loan system. But I am not going to get into the weeds, and we're going to save as much time as we possibly can for Q&A here. So what do you need to know right now? As Lane mentioned, the student loan system is a mess. A lot of that is actually downstream from electoral politics. I'm going to try to not talk too much about capital P politics here, but I do think it's important for student loan borrowers to understand why things are happening to them and who's been fighting for them and who's been fighting against them. So I suppose just to level set, You may have heard, you may have read, President-elect Trump is coming in, and he ran on a platform of abolishing the Department of Education. Uh, that might raise a bunch of questions about whether there will be student loans again, whether there will be student loan servicers moving forward, and how we'll pay for education in America. And the good news on that is that it would take an act of Congress to abolish the Department of Education. There's no real expectation that that's an achievable goal. In the near term, the votes aren't there, the power's not there. But it doesn't mean that there aren't very real threats to the way American government works for working people. And for people with student debt, we are disproportionately at the mercy of the federal government and the private companies the federal government hires to make the system work. And so I think we should be prepared for anything. It's important to remember that President Trump's the one that shut the whole student loan system off at the start of the pandemic. It's also the same president who appointed Betsy DeVos to be education secretary, who did the bidding of for-profit colleges and student loan companies and caused much harm to people with student debt. So we'll see what we get moving forward, and advocates are going to be working night and day to make sure that people with student debt are protected along the way. But what's happening right now? That's the future. President Trump doesn't get sworn into office for more than a week. We've seen a lot happen just between Election Day and today. So as Lane mentioned, we've watched some of the biggest efforts to deliver mass student debt relief for people fail over the past few years. In 2023, the Supreme Court struck down this first proposal to cancel up to $20,000 worth of student debt for 40 million people. President Biden went back to the well and proposed rules to try to deliver more debt relief for people. That was also met by litigation, and I'll talk more about where that goes from here. But I don't want to jump past just how much student debt relief has actually been driven back to people over the past 4 years. When President Biden came into office, 99 out of every 100 public service workers were being rejected for public service loan forgiveness. The income-driven repayment plan, Lane mentioned you have a right to 20 or 25-year debt cancellation. That had canceled loans in full for 32 people across the country when President Biden took over. You had a better chance of being struck by lightning than you did having your debt canceled under income-driven repayment back before the Biden administration came in. We've now seen more than 1 million people get debt relief under public service loan forgiveness. We've seen more than 1 million people get debt relief under IDR. The Congresswoman is right. The system is broken. This is not to say that this is working the way that it should, but we've made real progress, and we've shown that these programs can actually be made to work. And that scrambles the politics a little bit. It becomes harder for the next Trump administration to shut it down because it's working now, at least to some degree. Doesn't mean that our most ambitious plans got off the ground, and it doesn't mean that the debt you're stuck in is just, but it does mean that these programs can be made to work, and we're going to hold the administration accountable for working them. So I mentioned the Supreme Court blocked the most ambitious proposal to cancel student debt for 40 million people. The Biden administration was met with waves of right-wing AG lawfare that resulted in ultimately, after the election, them withdrawing the next effort to cancel debt broadly for people. But also the most affordable payment option, income-driven repayment, was available and was taken up by 8 million people. That was also blocked by litigation. That plan has not been withdrawn. The Trump administration is going to have to choose what it does next. But right now, 8 million people are effectively in a payment pause. They're not getting charged interest. They can sit still. If you're working in public service, I'll get to that. There's some more you need to know. But for right now, for most people, being able to sit still isn't such a bad idea. You're not being charged interest. Your debt's not going away. But also, you can pay with it with future money and not have to stretch your budget right now. We are going to find out more likely from the Biden administration about how they expect that to last. And then the Trump administration coming in the door is going to have to decide what to do with the lawsuit around the SAVE plan, what to do for those 8 million people. And I would just remind everybody here, President Trump ran on lowering costs for working people. What he does when he governs is a different matter altogether. But it is, inconsistent, at least with the message he ran on, that his first order of business coming in the door would be to raise costs for people with student debt. We're going to be holding him accountable. We're going to be asking those questions. I do want to dive just a little bit deeper into the state of the world for those 8 million people that are in the SAVE plan that are not making payments right now. Lane mentioned all the good things income-driven repayment does. Right now, if you're enrolled in SAVE, There is no debt cancellation after 10 years or 20 years. There are no lower payments. You're just getting a payment pause temporarily. And over time, you were supposed to have interest waived in real time. That piece isn't working right now, but interest is still being waived for folks that are just trapped in this litigation. The good news though, for the people that are in that 1 million cohort of people that got their debts canceled already, nobody's reversing your debt relief. The Republican AGs that are suing aren't promising to reinstate your debt. President Trump is not going to reinstate people's debts if you had your debt canceled. If you're lucky enough to be one of those people that did get their debt canceled during the Biden administration, you're good. Everybody else is struggling, and we're here to help. It is important for public service workers to know, though, that this payment pause that you're in, if you're in SAVE, it doesn't count towards public service loan forgiveness. I'm just repeating what Lane said, but we've gotten a lot of questions. I'm sure there's a lot of questions in the queue about this. What does it mean that I don't have to make payments right now? If you're not trying to get debt cancellation, you're just trying to make ends meet, you can sit still. The government will pick up the interest. It's not going to cost you anything to sit in place. If you're working in public service, you're not going to be getting credit towards debt relief, and you need to take an additional action. We also hear every day from people that call their student loan company and ask for help or just ask for answers related to this pause on loan payments. And lots of people are getting bad information. We are currently representing American Federation of Teachers in a lawsuit against Mohela for giving people bad information about their repayment rights and for generally cheating them out of quality public customer service. There is a lot of blame to go around. And the Biden administration has just put in place on its way out the door some recourse for folks that were paused because of the SAVE litigation, called their servicer, asked for what to do, and were given bad advice. There is an email inbox on the slide. It is repayment_support@ed.gov. If you write to that inbox and you say, I was misled by my student loan company, I was told that I could get credit towards public service loan forgiveness when I cannot, they're actually going to go back and fix your account, and people will get credit for this time that loans are paused. Again, that is the current plan of the current person in the White House. We don't know what the future will hold. People should be ready for anything. But right now, if you send that email today, someone will receive that email and will gate this in a way that gets you credit. So this is my great tip here. This is the one thing that Lane didn't cover that I do think you really should do if you work in public service. This is an opportunity to get credit that you otherwise wouldn't. We'll make sure that that email address gets sent around afterwards too. But this is like a hot off the presses. This just got announced last week, and it may only last for another week. So take advantage of it. Important takeaways. You should do a checkup on your student loan account right now. We don't know what the future holds. Go to studentaid.gov, log in, look at your payment counts, take screenshots of your payment counts. Use the PSLF help tool to double check to make sure your employer counts. There's all this great tech that was built over the past 4 years designed to make this messy, complicated process so much easier to navigate. Take advantage of it. I don't think we have any expectation this stuff's going to come down a week from Tuesday, but you never know. And it's certainly clear that the new administration is not going to have the same zest for driving debt relief and helping working people with student loans that the last one will. And so it is, it's important to know your rights, to know the state of your student loans, do a checkup on your student loan account, and keep records. If you need more information about how any of this works, we have a website that we maintain with a number of large labor unions called cancelmystudentdebt.org. There's tons of resources about the debt relief programs that Lane mentioned, the state of play on SAVE, what to do if you think you're eligible, what to do if you've been if you've been lied to by a student loan company, what to do if you've been victimized by a scam. And then I just wanted to end with, you have lots of options to file complaints, and you are very lucky to have Lane here in Oregon. I was an Oregonian until July. I just moved out of state, but having a student loan ombudsman in Oregon is a huge deal. Not every state has that luxury. We have lots of information about where to go to get help on cancelmystudentdebt.org, including where to find Lane. So with that, I think we're happy to do as much Q&A as we can. Sorry that I took a little bit of time there, but I do think there's some breaking stuff that you should know.
Thank you so much, Mike. That was really informative. Now, Lane and Mike, look forward to taking your questions. We'll be taking a mix of live and pre-submitted questions. If you'd like to ask a question, please click on Q&A at the bottom of the screen and type in your question. I will read questions aloud. If you need further assistance, please contact our office or your member of Congress. If you live in Northwest Oregon, you can reach the Congresswoman's office by going to bonamici.house.gov and then clicking on contact. Our first question today is a pre-submitted question. Who can I turn to for personalized recommendations to lower my monthly payments? My loan servicers have been a poor resource. I'm going to send this to Mike.
So there are a number of options you can go to be able to get personalized advice. If you are a union member, go to your union. Cancellmystudentdebt.org also has some resources for folks. If you live in Oregon and you don't make a lot of money, there's also legal services in Oregon that can provide representation to you. There are financial counselors as well. But the real upshot of this, though, is that it's actually very hard to find personal advice for student loan borrowers, and there aren't a lot of resources out there. Having the set of experts on this call is a great place to ask that question, and a lot of us are here to help. But I will say that you shouldn't overcomplicate things. That most of the options for people are fairly standard, and spending a little bit of time on the education department's website, on cancellmystudentdebt.org, on Lane's website will help you most people under most circumstances. But there are people that do need a lawyer, and I definitely would recommend legal services where you think you need a lawyer, especially if you're in default, and especially if you have been sued by a lender.
Thank you, Mike. Our next question is a live question. This is for Lane or Mike. For Parent Plus loans that were consolidated and placed on an income contingent repayment plan, is there a maximum number of years or payments for forgiveness? Are Parent Plus loans eligible for PSLF? Any tips on types of relief?
Yes, Parent Plus loans are always a tricky area, and it was one of the groups that we were hoping to address with the negotiated rulemaking that was withdrawn. What I will tell you about Parent Plus loans is, one, yes, they are eligible for public service loan forgiveness. You, the parent, needs to be working in public service, not your child. The income contingent repayment plan is eligible for public service loan forgiveness. And at least as far as I know, 25 years on that plan should also lead to cancellation.
Thank you, Lane. Our next question is a pre-submitted question for Lane. My student loan servicer took me off my previous payment plan before my save application could be processed. Can I get back on it?
Yes, you can. That would be the kind of situation that I would recommend you file a complaint with my office. The reason being that we would then be able to investigate exactly what happened and what action that you would need to take in order to get back on that plan you were on before.
Thank you, Lane. Our next question is also for you. This is a live question. I am a senior and finally got on a save plan. I am confused and not sure how to sign up for a new payment plan. I only have Social Security income. Should I switch to another payment plan? Can I do it by phone or by paper?
So if I were you and I were on the save plan, I would go ahead and just wait right now. The reason being, your loans are not accruing interest, you are not required to make payments, and the courts are still trying to figure this all out. So my best recommendation is to stay put at this moment.
Thank you, Lane. Mike, what should I do if the Trump administration refuses to process PSLF completed program applications?
I would not expect the Trump administration to refuse to process PSLF applications. I think that what you should do is just sit tight, and if your student loan company is slow to get back to you on the status of your PSLF application, you should submit a complaint to the Consumer Financial Protection Code, to the Oregon Attorney General, to Lane, about the status of your PSLF application. One thing that Lane mentioned that I do want to make sure to address here is that the Education Department has talked a lot about how it is bringing PSLF application processing in-house, that it is doing this itself. It is not actually, in fact, doing it itself. It is hiring private contractors, and just they're working as the Department of Education. Many of those private contractors are the same companies that are near and dear to your heart, including Mohela. If you are dealing with a company that is processing your PSLF application and you call the Department of Education and ask for the status, you can ask whoever answers the phone where they work, and you can submit a complaint against the company. These are private companies. They are subject to federal and state consumer protection laws that protect people with student debt and people that are going into commerce and using financial services, you have rights against these private companies, even if they're operating on behalf of the Department of Education. Uh, that's all downstream, though. I don't think it's going to get there. I think that you're not going to end up in a set of circumstances like we had with Betsy DeVos, where 99 out of every 100 applications were getting rejected and others were waiting for months to be processed.
Thank you, Mike. This next question is for Lane. How can I know if I qualify for debt forgiveness? With so many different programs, I'm not sure how I can get information to know if I qualify for any programs.
So there's kind of two answers I would give you there. The first answer is studentaid.gov. Their forgiveness and cancellation page is going to detail every different type of cancellation available and what kind of attributes that you would need. The other answer to that is that most forgiveness is based off some characteristic that you have. So you went to a predatory school, you're disabled, you work for a nonprofit employer. So that's the other thing that I would just kind of encourage, is to think about what circumstances you have that may make you different from other borrowers, and kind of have that front of mind as you go to read studentaid.gov forgiveness, or go to cancelmystudentdebt.org.
Thank you, Lane. This next question is also for you. This is a pre-submitted question. I'm 67 years old and have been paying my direct loan for over 20 years. Is there any forgiveness available for 20-plus-year-old loans?
So the one-time account adjustment was expected to cancel a lot of 20-year-old loans for undergrads. Now, where this gets very complicated is that they are canceling loans that have been in repayment status for 20 years. So that means that if you were defaulted, that time does not count towards the 20 years. If you were in certain kinds of forbearance or certain kinds of deferment, those won't count towards the 20 years. All of that is being done automatically. So all you need to check in terms of that is that you need to make sure you have a direct loan. So that goes all the way back to the beginning of my presentation, that you may need to consolidate to get a direct loan. But as long as you have a direct loan, then the cancellation based on time and repayment is being done automatically. There's not an application for that.
Thank you, Lane. This next question is for Mike. What would be the impact of the discussion of dismantling the Department of Education on the student loan repayment and forgiveness?
I think we don't know the answer to that. You would think, if the people that are advocating for abolishing the Department of Education and calling the student loan system unconstitutional, that they would be the strongest allies in the fight to cancel student debt for everybody. You would be mistaken. Generally, they are the same people that are funding the dark money lawsuits to block student debt relief. I think that we don't know one way or the other where that actually shakes out, but importantly, it would require an act of Congress. And so it doesn't seem likely that there's going to be any real concerted effort to do that.
Thank you, Mike. This is a live question for Lane. Do payments while on deferment still count for the forgiveness program? It's been confusing what payments count and what payments don't count.
So the reason it's been confusing is because it's a very complicated answer. I actually was recently on a call at the Department of Education. I asked them how many different types of forbearance they have in their system, and they told me 93. So of those 93 types of forbearance, some of them count towards public service loan forgiveness. Some of them count towards your progress to income-driven repayment cancellation, and some do not. My guess is that this is related to the save pause that's going on right now. If you are one of those 8 million borrowers who have applied for or are in the save plan and are now in forbearance, that specific forbearance does not count towards public service loan forgiveness. So if you are wanting to make progress towards public service loan forgiveness right now, I would recommend switching to another plan. This also goes back to what Mike mentioned earlier about that magical email address. If you have called and been told that right now you are making progress towards public service loan forgiveness, I would recommend sending an email to that address and saying, why was I misled by my servicer? Anything to add, Mike?
Sorry, I was trying to see if I could drop that email address in the chat one more time, but I am struggling with my technology. We'll make sure everybody gets it.
Thank you both. Our next question is for Mike. And I've lost my question. This is a pre-submitted question. A question I hear often from family: why are my tax dollars being used to pay other student loan debt? I don't know how to talk to them about it since I'm in student debt.
So I will say, we all hear this, but we've also done a lot of polling about attitudes on student debt relief, and I think that the divide actually tends to be more generational than partisan. Younger Republicans, younger independents, younger Democrats all support government action to deliver student debt relief. And a big part of the reason why is that we all know, I should say younger, I'm not young anymore, but when I was young, we all know from experience just how broken the student loan system is and how different the balance that's on your bill looks from what you were promised when you went to college. We see that the typical person with student debt ends up deeper in debt over time. For every borrower who pays off their loans, there's another one who doesn't. And for people of color in particular, this is really a very dire situation. For every one Black borrower, for example, who pays off their student loan in 10 years, 5 more are even deeper in debt than when they first started. That's part of the case that we made to the White House to take these sets of actions to be able to deliver student debt relief. This isn't about giveaways or handouts. This is about making a system actually keep its promise and advance economic opportunity for a generation of people. So I don't know how compelling your presumably older family member is going to find any of those arguments. But I will say, when you look at who opposes student debt relief and you look at who supports it, it really is just older Republicans who think this is a bad use of people's money. And the rest of America understands that the system is broken and government should be there to help.
Thanks, Mike. We've got a live question for either Mike or Lane. My school was involved in a settlement and many borrowers were forgiven, but I wasn't. Is there any way to reassess?
My guess is that this is probably a question about the art institutes. I have seen quite a few complaints about this, and even if it's not the art institutes, the answer is the same. Most automatic borrower defense to repayment discharges were based on when you attended. So it has to do with certain dates. I have helped a handful of people already who went to art institutes, who attended outside of those dates and didn't get the automatic cancellation. I have been recommending, and we have been seeing the best progress with them submitting their own borrower defense to repayment application. So to simplify that, there are group discharges for predatory schools. Even if you were not included in that group, you can still use the findings that were applied for that group discharge in order to complete your own individual borrower defense to repayment application, and that's what I would recommend.
Thanks, Lane. Our next question is for Mike. So the SAVE lawsuit ended the repayment plan. Is the loan forgiveness a viable option still?
So I guess I want to really reiterate that the broad debt relief that never ended up helping anybody, those plans are over. The Biden administration withdrew the regulations to try to propose some more sweeping efforts to deliver debt for working people. That was a downstream consequence from the election. It was also a consequence of litigation. SAVE is not exactly in that situation. Nobody has withdrawn these rules. They were actually in effect. 8 million people enrolled, including you. And you remain enrolled in the SAFE plan until the Trump administration takes some new actions here. We don't know what those actions will be. We don't know what the courts will decide. No court has decided this is illegal. Right now, it's been temporarily suspended while this litigation takes its course, and it will be up to the Trump Justice Department how to proceed with that lawsuit. It will be up to the Trump Education Department to decide how to proceed with these rules. But right now, they are rules. They are in effect. You have opted into that plan. Maybe more importantly, whether you're going to get credit for the time you're spending in this holding pattern, the answer is right now, no. You're not making progress towards loan forgiveness under the SAFE plan because you're in this forbearance while the litigation takes its course. I think it was a bad policy call. A lot of us pushed the administration to try to give people credit for that time in stasis to make sure that they really weren't being harmed by this litigation. We couldn't get all the way there. We're continuing to figure out whether there is a legal remedy there, whether we're going to end up suing the Trump administration to try to get you loan forgiveness credit for while you're in SAVE. But as of right now, you are in just the state of limbo. But you're not going to get kicked out of the plan. And it's possible that the end result here is that SAVE gets put back into effect. It's also possible that Congress eliminates SAVE in the interim. It's a very uncertain moment. And I'm sorry that that's not the most satisfying answer, but that's where we are.
Thanks, Mike. Our next question is a live question for Lane. Are retirement savings and Social Security considered income for repayment?
Great question. When we talk about income, we are not talking about wealth. So your retirement savings are not part of that calculation. However, whatever you are earning, if you're earning any dividends from those savings, that might be included in your income, and Social Security generally is included in your income. That being said, most people who are earning Social Security are under the threshold where they can have a $0 monthly payment. So it is going to be considered part of your income, but it doesn't mean that you will be required to make some kind of high payment.
Thank you, Lane. This next question is also for you. It's a live question. I was working for a nonprofit 53 years ago when I tried to get my work information, and they no longer had files for the years I was working. Is there any way to access previous work records that are eligible for PSLF?
So the first answer is that the Public Service Loan Forgiveness Program began in 2007. So the first month that someone could be eligible to gain credit towards their 10 years is July of 2007. So if you were working somewhere 53 years ago, that would probably be well before 2007, before the program existed. So that's the first answer. The other answer is that if it were more recent, so for example, I am working with somebody who worked for a school that has since closed. You can use your W-2s, your Form 1040 tax forms, pay stubs. You can use any of those to show that you worked at an employer that no longer is open. So there is a route to do that. It's a little bit more complicated and it is possible. However, the time you worked there needs to be between 2007 and today.
Thanks, Lane. This is a live question for Mike. Can we use Biden's bankruptcy law just to discharge student loans? Can you discuss bankruptcy and student loan debt?
Absolutely. So over the course of the past 20 years, bankruptcy laws changed in many ways that really hurt people with student debt. You cannot use the normal bankruptcy process that you'd use for credit card debt or medical debt to discharge a student loan, full stop. There are some exceptions to that if you have debt that you took on to pay for college that isn't definitionally a student loan. And there are actually lots of private student loans that fall into that category. As many as $30 billion of the outstanding $150 billion of private student loans, you can use the normal bankruptcy process to discharge. But if we're talking about federal student loans, your bankruptcy rights are very, very limited. There is an administrative process the Biden administration created to try to offer a parallel track for people that have federal student loans and can't use bankruptcy courts to discharge them. That process still requires you to get a lawyer. It still requires you to file what's called an adversarial proceeding in bankruptcy court. So like your bankruptcy lawyer will guide you through that process, but the rules of the road are much more permissive and people are getting their debts discharged in bankruptcy by retaining a lawyer and going through the process. So that's complicated. The actual explanation of how this works is even more complicated. I'm not the right lawyer to explain it to you. If you want to think through whether bankruptcy works for you and whether this new leniency in the bankruptcy process is something you could take advantage of, you should just talk to a bankruptcy attorney and they can help work you through it. I do think that that's likely to stick around. It seems like there has been some bipartisan support for revisiting the bankruptcy treatment of student loans over time, and that this administrative process doesn't seem like it's going to be on the chopping block in the first week of the new administration.
Thanks, Mike. We have a live question for Lane. This person is wondering if they should try to change from SAVE to a different plan. Which IDR plan is most recommended for those who are on PSLF?
So we did touch on this already a little bit, but basically, if you want to make progress towards PSLF right now, your options are to switch over to the pay or the ICR plan. They just reopen the application, so you could switch over to those. You could also switch back to a standard repayment plan and continue making payments that way. It is possible that SAVE will continue. We just don't know yet. So it really is just a matter of if you want to make that progress, you're going to have to make it on another payment plan.
Thank you, Lane. I have a question for Mike. If I have a collection of direct loans that I've made significant progress on towards PSLF payments, will I reset that PSLF timer if I consolidate these loans? Can you discuss what borrowers should do if their loans are in collection?
I'm going to answer part of that. I think Lane actually probably take a piece of that too. The short version is you can. There was a window during the Biden administration where you could have consolidated into a new loan and gotten credit for everything before that, including for loans that don't qualify. These older FFEL or federal family education loans made by private lenders like Sallie Mae or Citibank and guaranteed by the federal government. The window to do that has closed. If you have a direct loan, if you took out a loan since 2010, it was made by the federal government, you were getting credit already, you can port that credit through a consolidation. Now, the new rules let you do that. I'm looking at Lane to see if she is nodding to make sure that I actually got those details right, but I think I did. That's not like the normal use case of a consolidation. Most of the people that are consolidating are actually trying to turn a different kind of loan into a direct loan. And like the window to get credit for that public service has closed, unfortunately. And there is nothing that I think we see coming down the pike that's going to open it back up. If you are in collections, using consolidation to get out of collections is a great way to get out of collections. It is better to have a direct loan than it is a defaulted FFEL loan. You will eventually have more rights, even if some of that environment is uncertain. You do need to be careful about what collection costs you're going to be on the hook for when you do that consolidation. It's not a one-size-fits-all always consolidate, but it's not a bad way to get out of some of the most punitive pieces of the debt collection scheme. And it's definitely the fastest way to get out of default. I don't know, Lane, if I'm missing anything else. If you want to do any cleanup on that.
No, that's exactly what I would say. I would say you want to consolidate into a direct loan and have that new direct loan in a current status. That's how you're going to be making progress towards public service loan forgiveness.
Great. Thank you both. This is a question for Lane. Do you have any suggestions for someone that does not qualify for disability, but is too immunocompromised to work conventionally to repay their student loan debt?
So this is not going to be a very satisfying answer, but if you have low or zero income, you can apply for an income-driven repayment plan and have that zero payment and be making progress towards cancellation. So if I were in that circumstance, I would go ahead and apply right now for SAVE, Pay, ICR, whatever you can apply for right now, get put into a forbearance or get put into a zero monthly payment plan, and then just make sure that you're continuing to recertify that so that you can stay in that low monthly payment plan.
Thanks, Lane. This is also a question for you. I'm an independent contractor with an unpredictable monthly income. How can I ensure my monthly payment under an IDR repayment plan is as low as possible to account for that unpredictability?
I'm not sure that I really have a good answer for this. Mike, do you want to take this?
I think that unfortunately, this is one of those circumstances where the uncertainty in the student loan system isn't really accruing to your benefit. There was a lot of work that was done over the past 4 years to expand who's eligible for $0 payments under IDR, and just generally to make sure that like you're not falling further behind if you need help keeping up with your student loan payments. Big question marks across all of those things. And I think right now, if you're enrolled in SAVE, you could still enroll in SAVE and you can get what is effectively an interest-free payment pause as long as this stuff's going on. That might be the best thing you can do in the very near term. I don't know if you feel like that's responsive to this question. That's probably the best I've got.
The one thing I can also say is that generally, and again, the volatility right now makes it a little bit unpredictable, but generally it's possible to pull your income, your taxes over from the IRS and use that to determine your income. So, when that's possible, they're looking at your annual income. They're not looking at your monthly income. So I would just kind of bring that to the forefront that in most cases, it is a matter of what your annual income was. So as long as, you can submit an income for that year that makes sense, then that might be your best route.
Thank you both. Mike, is there any risk to continue to take advantage of SAVE if a borrower wanted to make interest payments?
No, absolutely not. And I think I might actually answer an adjacent question to that too. For borrowers that want to pay down their loans while they're on the save forbearance, it's a great opportunity to do that because you're not being charged interest at all. And if you try to enroll in save now, your student loan company has to let you do it, even though all you're doing is opting into this forbearance. You're not actually making progress towards debt cancellation. But it's basically a backdoor way for the government to just stop charging you interest on your student loan while you pay it off real quick. That's not everybody. Most people don't have enough money sitting around to make extra payments on their student loans. But if you're fortunate enough to be able to do it, it's a great way to make progress fast.
Thank you, Mike. Lane, Mohela said that they will not let me out of the save plan, but I'm desperate to get my PSLF counts started again. I'm less than a year away from 120 payments. They said the only thing I can do is switch to the 10-year repayment plan, which is more than my monthly salary. What do I do?
Well, this is what that email address that Mike has been showing us is exactly this. So that's the first thing that I would recommend is to send an email to that address and say, I need to be making progress. Please fix this. So that's your first action step. The other action step is to apply for a different income-driven repayment plan on studentaid.gov. So I generally discourage people from calling their servicers about income-driven repayment. I find that using the website is often easier, faster, more efficient, all of that. So kind of two action steps. One would be to email that special email address, and two would be to simply apply for a different income-driven repayment plan. Right now, ICR and Pay are open to apply for on studentaid.gov.
And I'm just going to go ahead and share this one more time. We'll also send it around after, but it's repayment_support@ed.gov. This really is a magic wand, and I don't know how much longer it's going to be around. So if you're in that situation, please take advantage of it.
Thank you. Really appreciate you bumping that resource. Mike, do you think that the federal poverty level will be adjusted for inflation in terms of student loan?
The federal poverty level is adjusted for inflation every year. That happens automatically. It's like operation of law. There's no real politics behind it. The federal poverty limit affects lots of people across lots of government programs, including state government programs that use it. It's like a key component of our social safety net, and it's not really tied into the politics around student debt. So the answer is yes. It's also just not as generous as it should be. Like functionally, what it means to be in poverty and what it means to struggle are not the same thing. And so, if your question is whether it's going to get easier for people, I don't know the answer to that. Probably not, because the people that are coming in, the administration don't particularly care about lower income people. But yes, the inflation is considered in the annual increase in the federal poverty limit.
Thank you, Mike. Lane, what is the processing time for the buyback program? Can I expedite the buyback program so I don't have to wait a lot of months after I reach my 120 months of eligible payments?
The buyback program is a mess. Some people are getting buyback letters. However, there is not a clear, succinct, direct way to make sure that you are going to be able to participate in buyback. At this moment, if you are trying to buy months back, let's say from 2018, 2016, you could submit a request via Public Service Loan Forgiveness Reconsideration and say, I would like to buy back these months. Really no idea if that's going to happen, what the future of that is. Really have no clue.
And the only thing I would add to that is that the buyback program is something that the government wrote rules to create. So unlike the IDR account adjustment or the PSLF waiver, that you could have a new education secretary to say, I just don't like that policy anymore, we're not going to do it. If you got rid of the buyback program, they would have to do a new rulemaking, issue new rules. It would take a couple years. They can't just not follow the rules that are on the books. And if they try to not follow the rules in the books, we're going to sue them. So stay in touch on buyback. If you have problems with buyback, let any of us know, but also file complaints about those problems with the Department of Education Student Loan Ombudsman.
And that's also an area you could file a complaint with me. We can at least look into what's going on with the buyback process. I'm just not feeling like it's very clear or obvious at this point. And I do think it's a great resource. So we'll see.
Thank you both. Somewhat related, Mike, this is for you. If President Trump ended the PSLF program, would those who are already enrolled be protected? What's the most likely scenario, and what grounds would litigators have to fight back on?
So I guess I'm going to work backwards there. I do think that for the people that are currently in PSLF, it's not clearly permitted under the United States Constitution that you could take that away from someone. And certainly there would be a robust legal effort to protect people that are currently in the program. I think backing up before you even get there, the politics of rolling back PSLF are not particularly viable. Unlike many of the other efforts to cancel student debt during this administration that have really been, unfortunately, a partisan affair in Congress. PSLF has always had a bipartisan cohort of members that support it. It would take a change in federal law to even just reduce how beneficial it is or change the structure, let alone actually repealing it. And it just doesn't seem like the votes are there, especially in a House where the Republican majority is just one or two votes. Of all the things you worry about with the Trump administration, passing a law to end PSLF is very much like akin to destroying the Department of Education. It's a talking point. It's something that some Republicans run on, but it's not going to happen.
Thanks, Mike. I've got a question for Lane. The current rules indicate that qualifying employment needs to include at least 30 hours a week. If I'm working part-time with two qualified employers and cumulatively work 30 hours a week between the two, does this count as a qualifying week, or is the system currently set up to recognize employment only through one employer at a time?
So before I answer that, I'm just going to say that to the previous question, I have been telling people, this is one of my big talking points, public service loan forgiveness has been in our promissory notes since 2007. The reason that that is important to know is that if they try to take it away, then what's the point of these contracts, right? That it's in the contract. So I just want to kind of throw that out there. The question, I'm sorry, can you repeat the question for me, Kelsey?
Yes, no problem. The current rules indicate qualifying employment needs to include at least 30 hours a week. If I'm working part-time with two qualified employers and cumulatively work 30 hours a week between the two, does this count as a qualifying week, or is the system currently set up to recognize employment only through one qualifying employer at a time?
Thank you. So the new rules do allow for two employers that add up to 30 hours a week. In my experience, it's somewhat difficult to indicate that in the system. However, it should make you eligible. Mike, anything to add? Other thoughts? No? Yeah, you should be able to qualify.
Great. Thanks, Lane. We've got one last question for Mike. He's got a conflict and has to jump off at 11:30, and we really appreciate all of his insight. Lane has a few minutes to take a couple more questions. So I'm going to give Mike this last question before he has to jump. It feels like every time we take one step forward, we take two steps back with student loan forgiveness. How do we keep up momentum and continue to build on the progress we've made, even under the Trump administration and a hostile court environment?
So I would actually say it feels more like we take two steps forward and one step back. Like we actually are making really meaningful progress in the way that the system works for people. And I don't want to jump over that with how hard and uncertain and sometimes punitive the system can be. It is, as the Congresswoman said at the top, it is a broken system. And there are tens of millions of people whose livelihoods are tied up in it. And that's not an acceptable status quo. And we're going to do everything we can to fix that. But for the 5 million people who are now debt-free under programs that didn't work at all 4 years ago, that is progress. It's not enough for everybody. And I would imagine that the several hundred people that are on this call are not lucky enough to be in that group. And we're going to keep fighting for you. But political action matters. And I'm not going to talk about that because I can't talk about that. But all these problems that we are having in the student loan system are downstream from politics. And it's important to share your voice. It's important to share your experiences on social media. And it's important to talk to your elected officials about what matters for you.
Thanks so much, Mike. Really appreciate your insight and expertise. We've got a couple more questions for Lane, and then we're going to wrap just after 11:35. Really appreciate Mike and all of your assistance. Lane, for borrower's defense, how successful is this program? Do you have any tips for applicants?
So that's a really hard question. I don't personally have any data on how many applications have been approved versus pending. However, I do know that there have been some very large group cancellations under borrower defense to repayment. There still is a big lawsuit in progress about borrower defense to repayment. So what I can say is that it is working better than it has before, and that people do see their loans canceled through there. My one tip for the application would be to submit as much supporting documentation as possible. And when I say supporting documentation, what I mean is stuff like advertising materials from the school, email communications with recruiters, um, really anything that bolsters or supports your claim. Um, as I mentioned before, if you went to a school that also had a group discharge, you can find a fact sheet online that shows why they were eligible for that group discharge. And often the fact pattern laid out in that fact sheet can be very useful for your application as well.
Thanks, Lane. I've got a question. I was paying under Save, Repay, and have been paused since July due to the lawsuit. In November, I reapplied for a different payment plan, IDR, because I'm at a qualifying employer and want to keep making payments towards forgiveness. When will I hear back? I didn't think IDR was paused by the lawsuit.
This is a really good question, and it's not a super simple answer, but I'll do my best to break it down. So what happened was when they rolled out Save, they got rid of all the other plans. They sunsetted them. So what that meant was that the only plan that they could put new applicants into was Save. When this injunction came up against Save, they basically scrambled to reopen some of those other plans. So it's not that those plans were impacted directly by the Save lawsuit, it's that they were expected to be sunset and now have been re-sunrisen. So that's kind of the status right now. I'm not sure how long it's going to take for them to process those applications. From what I've heard, it's being done all manually. They don't have their technology system set up because they had already sunset them. So that is what's causing the delay, is that they're doing it all manually. They should be able to do it within 60 days. And if it takes them more than 60 days, that would be a good time to file a complaint with my office, so we can figure out kind of what their timeline might be.
Thanks, Lane. We've got just a few more minutes, and unfortunately, we're not going to be able to get to everyone's question. I really urge you to use the resources Lane and Mike have shared and review the webinar for more information. As mentioned earlier, our office will be sending a follow-up email to everyone who RSVP'd with the link to the webinar, the resources discussed, Mike and Lane's presentations, so that you have that to reference. Lane, can I use all of my payments towards the 120 that I made while working at 3 different nonprofit medical centers, even if I was still accruing new loans for further education during that time?
So the answer to that is also a pretty complicated one. The way that I like to think about this is that each month is related to the loan you were paying on. So if you had only undergraduate loans at the time that you worked at one of these nonprofits, only your undergraduate loans are going to get credit for the time you worked there. So what I would recommend is to think of it as whatever loans you had at the time you made those payments, that time you had that qualifying employment, are the loans that will be eligible for discharge. The other answer to this is that you always have the option to consolidate all of your loans together. As of today, if you consolidate all of your loans together, the outcome will be the same as if you did not. So what I mean by that is that if you consolidate all your loans today, they will give you a weighted credit. The weighted credit means that whatever dollar amount of loans you had when you made that payment is the percentage that get the qualifying payment applied. So the weighted percentages thing is going to be very messy. It's really complicated. But the main thing to remember is that you will get credit for the payments you made on the loans you had at the time.
Thanks, Lane. My loans are broken into direct consolidated subsidized and direct consolidated unsubsidized. What does this mean, and how will it affect my eligibility for cancellation? I've been paying since 1998 and owe almost twice the amount of what I originally borrowed.
Yeah, so this is a really interesting thing. So the direct subsidized loans and direct unsubsidized loans are always kept separate. So if you consolidate, no matter how many times you consolidate, you'll always end up with the direct subsidized and the direct unsubsidized. It does not impact your progress towards any forgiveness. So those loans are on the same track. They have all the same attributes. The reason they keep them separate is because the government subsidizes or pays interest in certain circumstances on the subsidized loans and never does on the unsubsidized. So that's why they keep them separate. But for all intents and purposes, cancellation, repayment plans, they are all on the same track.
Thank you. My ex-wife and I have jointly applied for loan separation, and it's currently in forbearance and accruing interest while we wait for the application to be completed. Any news or guidance regarding the separation process of our loans?
No news or guidance, unfortunately. It's kind of a matter of waiting right now. If you've submitted that application, that's really all you can do. So I'm sorry to tell you, it's just a matter of waiting at this point.
Thanks, Lane. We've got one last question that we can get to today. How do I tell if they received my IDR application? Where do I see that on my account on studentaid.gov or the NELNet sites?
Yes, so you're going to want to check studentaid.gov. NELNet is not going to reflect your income-driven repayment application. So you're going to go to studentaid.gov. You'll log in and it'll pull up my aid summary. From there, you should be able to just scroll down and it should tell you the statuses of anything that you've submitted. Yes, so they changed that interface pretty regularly, so I'm not sure exactly where on there, but it is in studentaid.gov. In your summary, you will be able to find that information.
Great. Thanks so much, Lane, and thank you so much for your expertise and participation. Do you have anything to add before we close out the webinar?
No, I just want to say thank you so much to everybody who attended, and thank you so much to the Congresswoman and her staff. Y'all are very excellent to work with.
Thanks so much, Lane. And thank you everyone for joining us today. Our office will be sending a follow-up email with the resources discussed during the webinar, Lane and Mike's contact information, the presentations they shared, and any resources that were discussed during the webinar. This will also include a link to the live recording. Thank you again, and we're going to close out the webinar.